Hey, hello everyone, Ranjit this side. So today we'll be exploring BTST, which is buy today and sell tomorrow with the help of algo trading, and it will be for both for the beginners as well as the seasoned traders. First, we will cover the theory part, and then we will cover Python code. Now, let's first try to understand what is BTST trading. BTST stands for buy today and sell tomorrow. It involves buying a stock today evening before the market closes, and then we will sell it tomorrow morning, say as per our strategy. There are a couple of things that you need to take care. So first of all, you have to see the market when it is about to close. So let's say if the Indian stock market is about to close at around 3:30, so by 3 or 3:15 you should check the stock market whether it's going up or down, and if you like any particular kind of stock, just go through that stock, and then if everything goes well, if the market goes well at night, then the next morning you can sell that stock. The strategy that we will be following, so for example, let's say today is 31st May 2024, right? So this is our T day. Now, today we would like to buy it, right? So, and then we will sell it on, so buy date, right? And then sell date is 2024, which is our sell date. So, the T minus 1 will be 30th May, T minus 2 will be 29th May, right? 2024. Now, what the strategy says is, if T minus 2 close date and T minus, sorry, this is T minus 1 and T minus 1 close date, if difference of closing price of T minus 1 is greater than closing price of T minus 2 into 1%, 1.01. If the price is greater than previous date, like previous 2 minus T minus 2, then we will buy it. So what, and then if we have already bought it, then we will sell it. We are checking the candles of last 2 days, which is previous day is T minus 1, and this is T minus 1, and then this is T minus 2, which is previous days, or day before previous day, T minus 2. And if the difference between these two of closing price is greater than 1%, then we will buy it. So this is what the strategy says. So let me take you to the trading view, and then maybe you will be able to understand it much more. 2580 on the, so this is T minus 2 date, which is our 9th of Jan, and then we have T minus 1 date. So if you look over here at the top, the percentage increase is more than 1%, right? So that's why we bought it on this date. We bought it on this date, and then we sold it on this date, right? So this is how we are doing. And again, so this was a loss making stock, I mean the trade which we made, and then again here it compared these two dates and then bought it and then made a good profit. Let me check one more thing about the code. Let's say 9th of January, right? So let's go through 9th of January. So this was 11th. Okay, so we were right. So what we did, we checked, we compared the price of 9th and 10th, and then we bought it on 11th, and then we sold it on 12th. Let me go through that again. So we checked the data of the close price of 9th and 10th, and the difference is 1% of movement upwards, and then we bought it on 11th, and then we sold it on 12th. So that's how the BTST is implemented as per the logic in the code. Personally, I do not recommend to buy it today evening and then sell in the early morning tomorrow, because sometimes the market can be really fluctuating. I would suggest keep it for a couple of days, which we will be implementing in the future in the code. So, but we will check we will scan all those stocks which are giving more than let's say 5% or 10% within 1 week or 2 weeks or 14 days, let's say, and then we will, based on that, we will create the list of stocks, and then we will buy and so, because see, there are a couple of stocks, really good stocks, which can give you more than 10% in, let's say, every 2 weeks. You can surely, we will go through that, and I will show you those kind of stocks which are really amazing. and those things, I mean those stocks can be scanned with the help of code, right? So this is all when it comes to the algorithmic trading for BTST strategy. We'll be setting up an environment, Python environment, with all the necessary libraries that we have, like pandas, numpy, matplotlib, and yfinance. So yfinance is basically used to download the data from Yahoo portal with the help of API. You pass the start date and end date, and then it will give you the data. And then we will also visualize the graph so that we can go through what is happening with the data. We'll not be working on Nifty 50, but we'll be working on the Reliance data. Now, this is a syntax to download the data from Yahoo Finance website. Yfinance is the library, and then we use yf.download, pass the ticker name and start date and end date. Of course, this is not the end date. The end date should be the last date of the market. Then again, the backtesting is really important, and that's where the graph or visualization comes into play. Because if you don't backtest the strategy, when especially it's about the algo trading, you will not understand whether that particular strategy has worked on that particular stock or not. And then, like I said, we will go through the graphical visualization or representation. Now, this is the code that we will be utilizing. So what we have done over here, so we have used pandas library and then plotly. I'll show you why I have used plotly and not matplotlib or the seaborn. There is a reason for that, right? And then we'll be using the yfinance, like I mentioned. So yf.download Reliance data will download the data till the date. So this was yesterday, I think, or day before yesterday. So I have downloaded data till then. And one of the most important thing that you need to focus, or let's say you need to be aware, do not download data from Yahoo Finance very frequently, because they might block you or ban you from accessing their data in the future. So be very careful when you are accessing it on a frequent level. Right, so now this is a BTST strategy that I have created. Right, so the number of buys is empty list, sells is empty list, and whether we have already bought that stock or not, it's basically stock owned is false. So these are like initialization of a couple of lists. So empty list. Now we are going through each date, or let's say the number of records that we have, right? So one is the minimum number, and then we have the number of records of the data. I will show you the data. What we are doing over here, if we are not owning a stock, which means if we have not bought the stock, and if the close price, if the stock price of previous day is greater than the previous day, like t minus 2 date, and it should be greater than 1%, then we will buy the stock, or else we will sell the stock. Now what this code does, basically we are checking the stop loss as well of 2%. Let's say stop loss 2% stop loss, right? So 2% stop loss is also being implemented over here. So this is comment, let's comment this, and then we are again appending it to the list that we are creating for the cell. And then we have otherwise we will sell it. So basically it's three logic that we have built. So buy the stock if the stock price is greater than the, if the stock price of day t minus 2 into 1% is greater than the previous day, um, or else if the stock is owned and if it is going above the stop loss trigger that we have created, then it will sell it. Otherwise it will sell it again, based on this condition, if you are already owning it. Now why it is done without any logic, that directly we are selling it, the reason being, we are selling it on the next day itself. So here you do not, for this condition to sell, we don't need to put up a condition, because what we are saying that if we already own that data, it will sell on the next day. Otherwise we will buy it. We are buying it, then it will show us a green triangle. If you are selling it, it will show us a red triangle, right? So the y-axis is a closed date data, or the price, and then x-axis is basically the date. Okay, I think it's better to use line plus markers, right? Line plus markers is this is what the graph looks like, and then why did we use Plotly is because of couple of reasons. First of all, here you can point the dates on which the sale or the loss was made, right? And then you can again zoom in or zoom out. So this is why I was using the Plotly library, which is basically not always possible with Matplotlib or Cbot. Right. Thank you so much. Have a great day. Please take care. Goodbye.